Nike up 9% this year. Today, Cowen upgrades that stock to outperform. First time in 2 years, saying the product cycle inflecting. It's our call of the day. Steph, you own it. They're looking for gross margin. They say estimates there. The guidance could be too conservative. What do you think?
Well, I mean, I agree with the call, but I don't think I would be buying it here. If anything, I'd be taking some off because stock just went from 67 to 80 from the lows of December. So, and it's trading at 27 times forward. So this is high quality, fabulous product, good gross margin upside potential. Kicking butt in China, by the way.
Right.
So all of their businesses seem to be humming. I just think it's priced, a lot of it's priced in. So I'm not buying it. I'm happy to take the upgrade. I actually think Under Armour is the better buy in this space.
But you're not selling, I mean, you own it. You're not saying you're selling any of your personal position in it.
I would trim some. I mean, if we continue to see a rally, I think that there's better bargains elsewhere. But it would remain a core position for me. It's just that I don't need to be huge overweight this name after a 20% move in the stock.
But Under Armour's had a good move in its own right. So why that one over this one?
Because I think their margins at 3% have a lot more upside. It's a turnaround story that has been mismanaged for many years, and you now have adults running that company. And so I think that there's more that they can do. And innovation is really starting to pick up at that company as well, whereas we already know what the innovation story is at Nike. So I just think that there's more of an upside surprise potential at Under Armour.
Agree, disagree?
Does Nike require U.S. or global growth, or does it have enough of a secular story going on that even if the consumer is not as strong this year as it was last year, or even if the global economy is not as good, it wouldn't matter to their earnings estimates?
They have technology, they have speed, they have direct to consumer. So those are all in their favor. But of course, you're going to need global growth because you're going to have pricing power. They price these things almost like an iPhone. Do you know what I'm saying? Like,
so demand might not be susceptible, but pricing it will be.
Yeah, I think so.
Right.
So I feel like a fool because exactly what Stephanie's talking about. I'm an example of someone who bought the stock on the significant decline in
Nike.
December. Yep. And talked about it that I had gotten out. Obviously,
where'd you get out?
Lower than it is here, mid-70s. Rang the register on it. But listen, the core thesis doesn't change on Nike. And I think the thing that's compelling about Nike is the product itself. I made the mistake in trying to classify this company as falling into the potential China-U.S. issues. I think it's going to be able to withstand that. And if you look at their product lineup, you're talking about sneakers in terms of sales that 7 out of the top 10 global brands are all Nike. So to me, the product is just absolutely fantastic. I wish I could get back in it again at a lower price.
Well, what about
the market
the idea,
doesn't give you the chance to do that.
What about what Steph puts forth, that maybe Under Armour is the better bet right now, despite the fact that the stock's had a nice jump?
Listen, they've both done well. I've played Under Armour from the long side probably about a year ago. More recently, I've played Nike from the long side. I think both of them can appreciate, and it bothers me that I'm not long either.
I prefer Nike. So as far as I'm concerned, Nike's an iconic brand, and iconic brands can command premium valuations. They're really focused on this triple-double strategy, and nobody knows their customer better than Nike. So just for the fun of it, on the ride over here, I pulled out my phone, hopped on Instagram, went through 10 posts in 60 seconds. 3 of the 10 were ads. 2 of the 3 were ads from Nike. And they were the exact kind of shoes that I would be interested in buying. So I just think that really says a lot about that triple-double strategy and how well they're executing on it.
Jeff?
Used to be at 5% waiting for me 2 years ago. I've owned it right through this. It's now only 1. There was a Me Too issue. I can't remember how many months ago that was, or last year, or whatever. Anytime that happens to a stock, to me, it's like an accounting fraud deal. I got to trim it back. Didn't really hurt this company. The reason the stock is up, though, is executional excellence. The new management team promised delivery. They did. They enhanced margins. They really settled down the international markets. They cut costs. They're not getting whacked by China tariffs in the way that people thought they were. So it's expensive now. You know, I'm kind of unhappy that I left that 4% on the table. That's really what I'm miserable about, to be honest.
I'll take you 1%. It's better than my 0.
I know, but you know, when you had a winner and you, like, anyways, it breaks my heart to lose.